Welcome to Fuller Speed Ahead. I'm Craig Fuller here with Dan Connor. Dan, you're an OG at FreightWaves. You were actually here, employee number 4, maybe?
I'm just honored to be invited back, you know.
Well, we had a debate whether you should be back in there. We're so excited actually that you're here. I'm joking. You and I met. You were a venture capitalist. When we met, you were at a fund in St. Louis, and you were cold calling on startups.
Yeah, just trying to get to know them early on so that we could continue to keep track of their progress. I was in charge on behalf of the team of covering Texas, Tennessee, Georgia, and Kentucky at the time. So I was covering about 800 companies, and so literally going company by company, website by website. And I remember when I found yours, I kept it up as a placeholder for about a week, and just so I could track down contact information and reach out to you cold. Little did I know that you were watching all of the web traffic to your website like a hawk, and you were trolling me just as much as I was trolling you.
We were watching you. Two people watching each other, trying to figure out what's going on.
So FreightWaves at that point was top 3 of favorites in the company.
We were in those days called Transvix, which was, and we were based in Fort Worth.
I remember.
And we did D Magazine, which is Dallas Magazine, did an article on us because we had just raised an angel round from David Hunt, and that's where you and I connected.
Yeah. I still remember reviewing that transaction document, which is handwritten.
Yeah. Well, David writes notes. He's still making investments. I talked to him earlier this week. He said he's in 8 unicorns or something ridiculous like that.
Oh my gosh.
So big family office.
Yeah, Data.World I think is another one.
He ends up, because he's in a big family office, able to participate along, and I think he does good. I'm biased, but I think he makes pretty good decisions in the company to invest in. But he has no infrastructure, and everything's by ink. So.
Yeah, it's about to be unicorn number 9 from what I hear.
We'll see. We're not there yet. We've got a long way to go. We're making progress towards that goal.
What's the next chapter of growth for you guys?
I think for us, we've got some big things happening. November 12th and 13th at FreightWaves Live, we're going to launch our new Sonar 5.0, continuing to scale out our content around supply chain and sort of global trade. And I think freight as a business, as an industry, is super hot right now. And we're in the early phase of that. Broadly as an industry, not just FreightWaves, but actually as an industry, there's a bunch of digitization and transformation happening. Probably feels like media maybe in the late 90s or banking in the early 2000s. And so we're seeing all these sort of convergence around the industry that's driving a lot of our product iterations and a lot of what we're focused on. And I think we're a huge beneficiary of the industry trends. And I would like to think that we're also contributing, so not only taking and benefiting, but we're also contributing back to that.
Yeah, so that data-centric transition is a driving thesis for me now. So I ended up, after stepping down as your CFO,
So you joined us as CFO. You and I met. You were our first CFO when we were Prerevenue.
Right. Yeah.
So you got your chance to be in a startup and sort of see. I remember, we were Prerevenue. It was 4 employees. We got to 7.
And we were scratching to get conversations with funders.
We couldn't get any. I think you had a list of 200 VCs and no one would call us back.
Yeah, we ended up getting 1 yes. And it was just skyrocket from there. So,
I think about it, like Engage Ventures took us on an accelerator. That was an accelerator. But Fontenelle has led our Series C. And it's interesting because I tell a lot of founders, the most important thing about raising capital is getting a respected lead. And Chris Stallman, did you know this? I didn't know this, but that was Chris Stallman's one of his first deals that he championed.
Wow. I did not know that.
I didn't know that either. And I had heard that. I mean, he's been involved with the fund for many years, but it's one of the first ones he really ran. And obviously, it's gone well for him at FreightWaves. And I think he's done he's now a partner. He got made partner after that. So.
Right, yeah. So after stepping down, I ended up gathering up the pieces to put together this venture capital company, which is Ascend Venture Capital, ended up raising a small second fund, which puts me at $5.5 million in assets under management across these two funds. And Fund One is most in part thanks to FreightWaves, and the investment I made in FreightWaves is killing it. So Fund One is in the 90th percentile of micro VC performance.
Boom.
Fund Two is positioned to do even better.
How many investments did you have in that?
4.
So is our performance outsizing?
Yeah. So
I always ask our VCs, and I asked when I said, how do we compare to the rest of the portfolio companies?
So,
and if they ever tell me somebody's beating, I've heard it, we've had one this week that told me they had one company that's running at the same pace we are. And I'm like, no, we gotta
I said,
better. Next time they raise, let me know what they raise. I'll get another $1 on top of it. So.
So there are 6 companies in Fund 2 now, and I think 3 that are focused on the same sort of data-centric evolution in their industry, right? So that same transition that the logistics world is going through, that is happening concurrently in the electricity industry by gathering up data from the household level to the producer level to the transmission lines, to then start to partition it up in different ways to add value, and also in the cellular data world for emerging markets. That is a ramshackle industry now that's undergoing a modernization, and I think that the data-centric evolution that we're talking about is being driven by a new force that everybody is operating under when they go to work now. Everybody thinks that every decision has to be driven by data now, which is different from what it used to be.
They think, right? Or they know it has to be driven by data.
The expectation is central to everything in the industry, in an organization. Every decision is expected to be made meticulously and immediately based on data that's being gathered in real time. So that is very different from how it used to be 10 years ago, where we were still thinking, there's value in big data, but there are only a few companies that can gather that data. Now there are more connected devices around the world than there are humans around the world, and that growth in the number of connected devices is outpacing the population growth by 20 times. So eventually the number of connected devices that are scooping up data from every aspect of life in an organization or in a human's life is going to be fed into a myriad industries and analyzed in real time to drive decisions. And that is going to be this new world that we're entering into, where every decision is a data-driven decision, not just the ones that you can try to extract, big chunks of performance or efficiency from, but every decision.
Yeah, I think it's definitely data. We're a beneficiary of that for sure. I think back when you and I met, 2016. I was single, and it was before my wife and I. We were together, but we weren't living in the same household. And I remember AT&T came out to my house because I had a problem with my internet that's slow. Because all of a sudden, my entire neighborhood had just gotten Netflix subscriptions, and the whole thing crashed. And they came out there, and the guy said, "You have 58." I'm living alone. I had 58 devices on my Wi-Fi router. Wow. It's my watch, it's my cell phone, my tablets, my Apple TV. I was alone, 58. And I think about now, I would imagine that's well over 100. And it's exponentially growing. To your point, I didn't realize it's 20 to 1. I imagine that this is just the infants. I mean, we're in inning 1. We're in pregame in terms of what this means.
Right. But that expectation is underlying that very trend, right? And so, 10 years ago, Mark Andreessen wrote his white paper on why software is eating the world. I think the new chapter of that is that data is driving decisions throughout every industry and every decision in every organization.
So how do you sparse through the noise, because there's a lot of companies that talk about we're machine learning, we're AI. It was blockchain 2 years ago and sort of migrated to deep learning, machine learning. How do you as a venture investor decipher what is truly valuable data and data outcomes versus just noise?
Yeah, so there are, AI, machine learning, and that alphabet soup you can essentially simplify it by saying to yourself that those are now as ubiquitous a utility as water is. Or electricity. You plug into the wall and you get electricity. There are so many sources of data analysis or data science capabilities on the web now that you can plug in and get data science on your data relatively simply. So that I agree. There's a lot of noise there. There's a lot of capability, but that is essentially becoming. It just suggests a commoditization. The way to dig through the noise now, I think, is by looking at fundamental industry shifts and how data might inform large aspects of it. I mean, from building Sonar that the data feeds that you gather up inform a number of processes and analytics that are very useful to the subscribers to it. That is it's a valuable playbook in a number of industries.
Yeah, I think one of the advantages we have, and whether it's by design or by accident or whatever you want to call it, luck in many ways, was the fact that we also have a media outlet. And I think oftentimes what has informed what data we lead with and what data is that we have resources internally that have been we call tribal knowledge, have been practitioners in the space, have ran freight brokers, have been truck drivers like Dean Croak, the Grumpy Pete. And we have journalists that are able to bring those data sets to life and bring context to it. Because I think a lot of times, we talk to a lot of companies in the space that have data, but oftentimes they don't know how to commercialize it.
Right.
Or they don't understand how to contextualize it in a way that tells a story. Because I think data without context is just numbers.
Right.
It's meaningless. And I think oftentimes the companies that actually have the most data oftentimes don't know what to do with it or how to commercialize it.
Right. And that sort of situation, I think, is a lot, to use an analogy, is a lot like an aspen forest. So aspen forests are the world's largest single organism, right? So all aspen trees are connected by a massive root system that weighs literally tons. And you imagine that with the changing climate, there are new zones that could be home to an aspen forest that could not have existed before. And that, I think, is one of the ways to think about when there is this situation where there's a lot of data being generated that is not being gathered and written about like you're describing and partitioned in ways that can add value, then there's a massive new potential for one of these organizations like yours to come in and grow into the sole organism on that plane.
Yeah, I wonder timing most businesses, and there's actually a lot of data. Successful ventures, timing is the most important factor in success. And I think we just happen to be right place, right time, and I would argue right team that was there at the same time that brought that inflection moment to happen. I'm curious, these businesses you talk about, power and cellular telecommunications, highly regulated, big infrastructure, capacity constrained markets, very similar to freight in that standpoint. But I am curious, what other things, do they have a media resource or do they predominantly lead just with data aggregation?
Yeah, so there aren't, so the companies that I'm invested in don't have a media outlet, but that is one strategy that worked like a charm for FreightWaves, because there was an appetite for news that everybody from shippers and carriers to brokers and people who were just invested in equities were hungry for that industry news. I remember all of the different strategies that we ran to try and build up a critical mass of a market for the freight futures for day one, and that was the one that just took off.
I remember 2017, midsummer. We were all a little disenfranchised because you were trying to cold call venture cap VC funds, which weren't picking up or calling the call or returning the phone. I was sort of disenfranchised because the pitches I gave were going nowhere. And I remember sitting there like, something's wrong. We're missing something in the pitch. And I remember you and I having a conversation. We had to pivot the pitch. Something's not happening. We tried all sorts of things. And the one that really worked was this data-driven analytics business. And really the efforts of Brian Straight sitting in the background, writing commentary. Those things seemed to work. And I think that was the pivot that really enabled us to sort of become what we are today.
It was incredibly aligned and intertwined with every
people asked,
aspect of the business.
Like, how did we know? We didn't know. We were literally like, this seems like a good idea, let's do it.
So that situation where there's an appetite for news is not the same in
the power market.
Power or cellular industries. There's not that same appetite for news. But when you think about it from the perspective of building a marketplace, that you need critical mass on both sides of the market, even if there is a natural market of buyers and sellers like there is in the trucking industry, you still have to be very clever about how to engage as many people as you can on both sides of that market. And so there are different strategies that you can run. Sabre, for example, was a strategy that you can run for different industries that have different conditions. Essentially building the data pipes behind the scenes that are of massive value to the buyers and sellers. There are...
You do have the airline company, the airline booking.
Yeah, they connected travel agencies to massive amounts of availability and supply of travel resources. Obviously, they got bought for a giant, massive sum. There are other strategies like being able to offer a trade association like we did for the Blockchain and Transport Alliance.
It's building community. It's connecting a group of competitors that face the same set of challenges, that want to solve these challenges. They have to solve these challenges, and they know they can't do it alone. And you have to have these inflection moments of outside sort of parties coming into the space, which is what's happening in trucking. You've got Silicon Valley putting billions of dollars at work, and the industry is sort of forced to face these new. There's an interesting sort of theory that I have, and is that when I grew up in trucking, the companies didn't want to collaborate. They saw the competition. So my dad was competing against Covenant or competing against Schneider, or Swift. And while they may have had camaraderie, there was still this really aggressive sort of competitive nature to it. And I wonder, because you now have these, in their mind, and I'm not saying this, interlopers, the Convoys, the Uber Freights, these outsiders coming in from their minds, I'm wondering in some ways, does that unite, and I think it does, the existing incumbents together to say, hey, we're more alike than we are different, and these guys are not like us. And it's sort of forced them to think, we need to make these significant amount of investments, and we need to make sure that we as an industry survive, because if we don't, I mean, any CEO that has been paying attention for the last forever, frankly, that is sit there and pretends that the internet or innovation is not going to impact their industry have not been paying attention.
And the collective action of even fierce competitors to come up with solutions that can maintain competitiveness across the entire industry is of incredible importance, and that's a situation that is prevailing in a number of industries.
So I had to ask you, because you when I've been through the journey, you were at a fund, a larger fund, a Midwest fund, but a larger than the one you started
Right.
today. You then became you're a part of a founding team.
Yeah, the dark side, as they call it in the venture capital.
And I told you I
industry.
hated VCs. I will say it now. I hate most VCs, except my own, right? And I'm glad to say that. They're probably sometimes paying attention. As a founder, VCs are very frustrating, particularly in the early days where you're trying to get them to call you back.
Right.
They won't call back. Now you're sitting as a VC. I know you're one. What is it like having seen the path of a founder and the struggles of getting the call back? Does that make you return the call faster, or are you still, or do you get pretty cynical about?
No. I'm very focused on every communication with the founder. I answer every.
You were always that way, though. That's why we got along.
I think it's just there's the mutual respect there, right? You're doing something difficult. It's incredibly taxing emotionally and professionally, and so it takes a lot of gall in the first place to blast a bunch of cold emails out. You should at least get an answer within a relatively reasonable amount of time, whether or not that venture capital company is interested to dig deeper or is just not interested at all. If the answer is no, which it will be many of the times, you still want to hear the no as opposed to
do you give them advice?
Attitude.
Do you give them advice and say, hey, this is something you should look at, or this part of your deck or your pitch is a little off?
Absolutely,
do you provide that
and
feedback?
making intros to other venture capital companies that are closer in investment appetite to what they're creating. Those kind of things, very, very common practice.
So I want to ask you, looking back to where we were 2 years ago and you are now, you've sat on all sides of the table. What advice do you give to founders that you wish you had when you were trying to help us raise money 2 years ago?
So the first and best practice, I think, is to maintain in the early stages of your company. You have to reach out to literally hundreds of venture capital companies, and
you mean
allow
just
them
blast.
I mean, individual engagements with each of them to their full logical end, right? So from cold reach out to.
But that's so I mean, Dan, you know that.
You have to do it.
Emotionally draining and taxing that is.
Right, but in those conversations, you listen for what the reasons are that they're saying no, that they're not actually saying out loud, right? So the moment in your pitch deck where they start to glaze over or start to slack each other in the room,
texting each other.
That moment you need to internalize and figure out, okay, so why didn't that resonate? Is that an aspect of the business? Is it an industry appetite that is lacking? But the best thing to do is just they call it cascadura in Portuguese. It's like you have to have a really thick shell and reach out to literally hundreds of them, and then each one that says, I'm interested, but at a later stage, you put them on a newsletter.
How can I be helpful? Is the universal rejection.
Right.
If you hear how can I be helpful, it means they're not interested.
Yeah.
They just don't want to be rude.
Maintaining a monthly newsletter to drip on those people consistently is actually a best practice that doesn't get done a lot.
We did that, and that actually worked out well.
Yeah. So in my current fund, I've reviewed 4,000 companies.
Wow.
And I've talked to over 100, and I get 3 monthly newsletters from ones. Yeah, and and you have to think. So back when I was at Lewis and Clark, the Midwest-focused Series A and B venture capital company that I was working at when I discovered you guys, we had maybe 5 newsletters that we were receiving from startups that we had talked to. And they were running bets on which startup would hit $1 million in ARR by this date, and different cuts of every shade in that regard. And think about that, the ability to even know the name of one of 4,000 companies that you've reviewed well enough to make a bet on with your coworkers is a.
I think founders make the mistake of assuming that you were going to remember me, or that they remembered me, or if I had a bad interaction with them, I assume it was personal, or because I think founders you're very prideful. Mm-hmm. You probably have a bit of an ego if you can live in it long enough, because you got to believe your ideas are good enough. It's
right.
insanity to go start a business by all definitions of risk reward. Risk in the early stages of a business, a lot of research on this is actually so against you. The
right.
chances of failure are so high that you actually have to be a little bit certifiable on a spectrum to think that you can do this and do it well.
Yeah.
Otherwise, you get a job that actually can provide you a good life, quality of life. And so I think founders have a tendency to think that you as a VC remember them, A, and then B, that the opinions you hold are permanent toward their business.
Right.
But that's not true, is it?
No, unfortunately not. You have to have so many conversations in venture capital and review literally hundreds of companies per month.
How many do you review now?
It's an average of 300 a month.
Jeez. Yeah. And you look at all the decks.
Yeah, I look at every website. 95% are eliminated immediately because they're too similar to things that I've seen before. They're industries that I'm not knowledgeable about. Maybe they've raised more than the capital stack that I'm interested in. All kinds of reasons for that elimination. The remaining 5% take a long time to review because I'm thinking long and hard about, can they actually, are they a unique play? Can they win in this industry?
Dude, that's 10, and that's like 1 every 6 minutes. Like if you do the math, you review that many startups. How do you, when you look at a deck and you see something interesting, is there like a universal trigger in that? Or is there?
No, I don't think it's universal. The aspects that have become reasons that I've said yes to a conversation are they solving a mission critical problem for an organization, right? That could be anything from right now a financial hedge in the trucking industry would have been fabulous for hundreds of trucking companies to have had in place prior to to the start of 2019. That's a mission critical problem in an industry that has an average profit margin of 4%. Other aspects that are mission critical, growth in an industry can be the major appetite. But if you're if you're the entrepreneur calling on an enterprise scale company for ways to save on operational costs for X system, that's a much more narrow, difficult sell than
So you need to see traction,
right? Yeah. So that mission critical solution is something that is an immediate yes to a conversation.
Now you're pre-revenue. These are pre-revenue companies,
right?
So pre-seed or seed.
Yeah.
Now you doing Series A or?
Series A, I tend to get priced out. The check size that I'm writing is too minuscule among Series A participants.
I mean, the great thing from my perspective is you are the hero to these early founders because it's easy, and I mean that it's very difficult. The easy thing is for companies like a FreightWaves or Economy, Keep Trucking, whatever, the companies that have already raising more money is not hard.
Right.
Like if your model works, getting to those later stage funds is really about math. At the end of the day, it's just math. You're either growing and you have good unit economics, or you don't, and you may have to take a fund down round. The hardest money is the stage that you're talking about.
And it's only getting harder, right? So the number of companies that are raising Series A and beyond is rising in proportion to the number of companies that are raising early stage, pre-seed and seed. Those numbers in deal volume and value are going down, right? So it's even harder. So positioning my fund to sit in that range is good in that aspect because there's appetite from the companies to work with somebody, And from that point, if you can build conviction enough to make an investment based on a company that has a prototype and a promising mission critical solution, then from there you can start to make inroads to other venture capital companies that can write those larger checks for later rounds that they wouldn't have been able to find these companies in the middle of the country or for in the early stages.
So Dan, we have a lot of early founders that tune in. We've only got a few seconds left. Give me 3 things that you would recommend founders do to go find the Dan Connors of the world that are going to write those checks. So that first check is the most important check to be written.
Right.
What are those things that they can do to improve their odds of success of landing that first raise?
Right. So you can't be a stranger to the legwork that's required of it. Like going into fundraising mode is an exercise in repetition, like finding the names of venture capital investors and reaching out to a massive number of them, more than you can. Is
it okay to freeform and blast, or do
no,
you have to do?
I think individual is the way to go.
Reach out.
Because you have to track follow up after that point. Most won't reply on the first email, so you have to follow up. That's strategy 1 is just true legwork. Number 2 is, when you do have a conversation with somebody, it should be early enough that you're not in need of them cutting a check in the next 2 weeks. The ideal time is months and months in advance of your actual start of fundraising, so that they can start to get familiar with your company over time through your newsletters, right? So when a company says to you, we really like what you're doing, but you're a little early for us, you say, great, we're not raising at the moment. When the time comes, I'd love to have you on my list of folks to call. In the meantime, let me put you on my monthly newsletter. That's a good way to keep up to date. That's strategy number 2.
3, what you got?
Strategy number 3.
Best and most important.
Strategy number 3 is listening intently to the conversation when it goes awry in the course of engaging with a venture capital investor, as closely as you would to your customers, right? So in that early stage, you're listening to customers so intently that you will make changes to the product offering or the pricing on the fly in a single meeting, right? So applying that listening mentality to the venture capital conversation is in your favor, because in the next meeting, this is where that conversation went awry. Try a different twist on it. Move it to later in the deck. Have the answers to those questions in your back pocket, so you can hit them really hard and get them to move past that sticking point. I think that trio is the best possible keys to unlocking that.
You said something interesting, and I agree with. I've been told that by investors that are in and around, it's like they tell me I'm good at raising money. They say I'm a good, and I remember 2 years ago I wasn't, or 3 years ago I wasn't, because we want to raise money. I think it's practice, and I think the most important thing is what I got good at, or what we got good at as we went through the cycles, was learning not only how to raise money and pitch it, but also to pivot the business in a way that would help us improve those odds. And I think you have to have both of those. You have to be malleable.
Yeah.
I think oftentimes that's very difficult for founders to hear. It was difficult for me to say, hey, I don't like your business as it is. Mm-hmm. And you have to make these pivots or changes.
Right.
And I think about if we had stuck with just futures, how difficult our road would still be.
Right.
Because that's we're still in the early phases of that.
Right.
It's got a long ways to go, but the rest of our business is doing great. I think we would have, if we had not been malleable, if we'd been so focused on a single outcome, then it would have been we'd be in a very different position.
I think it's a lot like sales calls, right? You're gonna screw it up in the beginning with a number of really great prospects. the good news is that there are many more good
Hundreds
prospects out there. So
or
take
thousands of potential
take the
people.
swings and screw it up and listen for how you can fix it in the next iteration.
And to your point, there's nothing like starting now. I mean, I think the best thing you can do as a founder is start now, start often, get up and make those cold calls, because you never know.
Absolutely.
You need one. And we got one. We got really lucky with David Hunt in the early cycles, and then we got lucky again with, I don't know, lucky. Chris Stallman would argue that he's just really good instincts. We got lucky, we got in touch with him. And actually it was another VC, if you recall, that referred us. That actually made the reference to Chris that got us funded. So it's important not to burn those bridges. Dan, you going to FreightWaves Live in Chicago?
I'm looking forward to it. I'm going to try and make it.
So November 12th and 13th, you're going to be there. If people want to connect with you to get guidance on how to find that first funding, or perhaps just get guidance on what's happening in the industry, you'll be accessible there, right?
Yeah, absolutely.
So they can reach out to you. How do they get in touch with you?
I think at the conference I'll be milling around. I'll be looking at the forum to connect with founders there.
Fantastic. And you can always drop by the FreightWaves booth. We know how to track Dan down. It will be Movember, right?
Yeah, that's right.
Are you going to repeat?
Yes, most likely at the behest of my wife. Yeah.
Okay. So Dan will be there representing Movember.
With my mustache, yeah.
With his mustache, and representing a fantastic fund that's doing some really interesting things in St. Louis and is focused on early stage companies. I can't think of a better person to be connected with who's meant a lot to our journey. I really strongly recommend it. If you haven't got tickets to FreightWaves Live, you can get them today. Tickets do go up on October 15th, so be sure to register as soon as possible, and we'll see you there.
Coming at you live this November in Chicago, FreightWaves is debuting the next chapter of the world's most advanced freight market dashboard, Sonar 5.0. Sonar 5.0 will bring a fresh new look, more amazing insights, and additional weapons to give users the clearest vision yet into freight movements around them. New customization tools allow for better analysis of individual operations. An alert system will ensure you don't miss those big events that can impact your bottom line. More context, more insights, more power. As an added bonus for attending FreightWaves Live, we're offering Sonar Summits, the perfect opportunity to become a freight market expert. Users will be able to navigate the constantly changing freight markets like never before. Join us at a Sonar Summit at FreightWaves Live this November 12th and 13th in Chicago.